Welcome to the latest episode of the Financial Frontier. I'm your host, Patrick Camuso. I'm very excited to introduce our guest today, Andrew Belonogov, the founder of the Kabiri Group and an accountant that you have probably seen in the world of Web3 and crypto. Today, we're going to be discussing audits and internal controls related to cryptocurrency transactions and Web3 businesses. Andrew, thanks for joining me as a guest today.
Of course, thank you for inviting me.
Absolutely, absolutely. So to get started, can you tell us a little bit about yourself and your company and how you got involved in Web3?
Of course. So, my company helps Web3 businesses, uh, Web3 oriented accounting firms, and cryptocurrency funds with accounting specifically for complex transactions. I advise on technical accounting for example, if you have token generation event, if you need to account for token compensation, this is something where I would come in and prepare a memorandum and explain how exactly accounted capacities use GAAP. I provide advice to accounting firms working with crypto companies in terms of how to treat transactions and also provide internal quality uh, control reviews for these type of companies. And finally, I provide audit readiness services and audits as well.
Very nice, very nice. So to get into the audit side a little bit, what are some of the primary factors that a business should consider when they're preparing for an audit and they have a heavy amount of cryptocurrency transactions?
Yes, of course. So, oh, there's so much.
Mhm. All
First of all, it depends on the volume of transactions that you have. If your company deals with crypto on occasionally and if your volume transactions significantly not significant, then it's easier to deal with in terms of accounting, in terms of auditing. It might not create significant risks and might not require a deep involvement of the auditor. But typically, for Web3 companies, it will be thousands of transactions, if not millions. And here, the most critical areas, I think, currently is completeness, because most of accounting subject solutions they don't have uh, even controls embedded in terms of ensuring that all state changes of accounts they are add up to the total ending balance of account.
Yes,
So we miss a lot of internal transactions on Ethereum if we're talking about. We miss Genesis transactions on other networks usually, and a lot of other activity that might be just not indexed because of complex transaction structure or messages and events. So all of this needs to be considered by auditors and of course uh, addressed.
absolutely. And I agree. Specifically, the data integrity is the first challenge that you're going to face when you're accounting or you're auditing cryptocurrency companies, and verifying the calculated ending holdings to actual, I think, is one of the best approaches to ensuring that you capture the full data set. Now, are there any specific audit procedures that you recommend that auditors employ to assess the accuracy and completeness of crypto transactions?
Yes, of course. So uh, first of all, I think the most wonderful procedure has always been rolled forward, even before it became obligatory based on the new accounting standards. So it allows you to know exactly that your beginning balance plus period activities equals to the ending balance. It helps
Yeah,
you to validate your ending balance and in terms of completeness and accuracy. Confirmation letters also a little bit tricky when we're talking about crypto, but when you deal with custodians or other third parties like mining pools who can confirm transactions or assets that you keep with them, it's very helpful procedure. It allows you to add very persuasive type of evidence.
absolutely, absolutely. Now, obviously, the this is a nascent industry that we're operating in, and in terms of subledgers and accounting solutions, it's pretty fragmented, I would say. there's many different players that are out there. So are there specific subledgers that you prefer, and are you very focused on looking at, do they have a SOC 1 and 2 report, and what sort of importance do you place on that from an audit perspective?
Oh, it's an interesting question. So I think I don't really have preference in terms of accounting solutions. I think all of them have their pluses and minuses, and sometimes minuses are significant, unfortunately.
Yes.
Uh, and what I noticed is that SOC reports, they're definitely very important. When we're talking about cloud software specifically, and most of the accounting software used for cryptocurrency subledgers, they're cloud native. So SOC 2 reports is something that helps you to select a vendor that have appropriate controls over access, over changes, code changes, and all other areas that are important for you as a customer of a vendor, for data privacy and for integrity of your vendor database. But when I'm talking about audit, there are some other considerations that SOC 2 report typically not addresses. Specifically, SOC 1 type 2 report is something that's important. It allows you to make sure that the company, the crypto subledger, have controls over accuracy and completeness of reports that it generates and it you use in your accounting processes, and ensure that they have full coverage of controls over those risk areas that are important for your business. Something that is typically missing when you use SOC 2 reports.
Absolutely, absolutely. Now, in addition to that, I've been seeing, some auditors and developers come out with softwares specifically for auditing cryptocurrency.
Yes.
Have you examined those, and are you, leveraging those or advising other firms to leverage any of those at all?
That's interesting. I didn't try yet these solutions.
They're
I
fairly new from what I saw. Yeah.
Yes. I I saw them on the internet, and I think it's very interesting
Yeah.
offering. And I'm definitely going to try it, but I haven't tried it yet.
Yeah.
So
Yeah. Same here. I think it's interesting, but I haven't yet. But it's definitely interesting seeing these new solutions pop up. So is there anything that you think that, auditors, when they're looking at companies like this, in terms of the operating effectiveness of controls related to their safeguarding of digital assets? Can you speak a little bit to that? Are there any recommendations that you would give there, or best practices that you believe they should follow?
yes, of course. So first of all, we talked about internal controls, and for crypto companies, the key area where we typically see deficiencies and material weaknesses would be absent accounting policies, um, segregation of duties issues because of the size of the company, and IT controls over access and provisioning access and deprovisioning of access, uh, and similar. So, because of uh, because of the nature of crypto company businesses, um, one second, sorry.
Oh, you're okay.
Okay. Uh, I lost my thought. Okay. Uh, can we start again?
Yeah, no, absolutely, absolutely. And we were just talking about a little bit about the, effectiveness of, the operating controls for safeguarding digital assets. But also another thing I wanted to hit on too was, some of the emerging just overall trends and challenges that you believe, crypto auditors and CPA firms that are conducting audits are facing.
Yes, of course. Oh, so safeguarding of digital assets is very interesting area because we have regulation from SEC that basically requires us to recognize it, but accounting standards and FASB, they do not require it. So it's like optionally obligatory type of accounting that we need to have control over, and we need to have established appropriate processes about over, um, it adds up a lot of work to companies working as
Definitely.
auditors, who custody customer funds. And it's almost like all crypto companies. They sometimes, occasionally, in one or another capacity, custody funds. So typically what's missing is policies and procedures, as I mentioned before, uh, because all companies are 3, 5, 7 years maybe old. Uh, it's typically the HTC in the in this industry. So they don't just didn't have time enough time to develop process and procedures, to build a team that have appropriate segregation of duties, to establish appropriate access prevention controls, and all of this create issues and potential concerns for auditors, and risks that might cause material misstatement.
Absolutely. Yeah. At the end of the day, most of these companies are very early stage and they're really just trying to wrangle the very basics of their back office in terms of,
Yes,
putting up an accounting function. And when it comes to, implementing effective controls in, considering things like segregation of duties, access controls, risk assessments, and the like, these are higher level things that a lot of times, like you're saying, it just hasn't, the company hasn't gotten to prioritizing this yet. But when you're going to undergo an audit, these are imperative and these are probably going to be, some common internal control weaknesses that are going to get raised during that audit process. So, obviously we're both very early to this industry overall, I would say. Um, Obviously, the industry's been around for a while, but in terms of really, like, professionals coming into the space, it's really only been these past couple of years. um, what advice do you have for, CPAs, CFOs, accountants, tax professionals that are interested in building up their expertise in this space in the anticipation of, the growth and just serving more clients in this space? Do you have any advice for them?
yes, of course. I think my first advice, first of all, read documentation, protocol documentation, software documentation, DeFi, blockchain. Any documentation is always very necessary to know exactly what's happening in the system or on chain. Without it, you won't be able to understand it yourself. And also use and always try and use new tools that are coming out, because they're definitely helping to address these challenges.
Absolutely, I agree with you. Everything with this industry is new and has to be taken from a first principles perspective. So, going to source documentation, testing new tools to see how they're going to fit in your workflows. You constantly have to stay curious and, really be putting in that effort. It's not something that you're going to just research one time and, be able to capture the knowledge of this industry. It's constantly changing and evolving. Now, do you see traditional firms being prepared for the increasing commonality that we're going to see with, digital assets making its way into more traditional companies in the future? And how do you sort of see that playing out in the future?
Yeah, I definitely think that there is a lot of miles to go through before we can reach a point that we can say that everyone is ready for digital asset adoption in terms of accounting and auditing. But my main advice to these companies is first to consult with professionals who have experience in the space. When you encounter complex transactions, when you uh, deal with crypto and you just generally need to meet the requirements of the auditing standards or review compilation and so on. So first of all, consult with appropriately experienced professionals. And other than this, make sure that data is always complete and accurate. Thorough forward is always necessary. Don't forget about it, because a lot of companies forget about it. And we finding that there's like half a balance absent from activities in the middle of audit, so nobody wants it.
Yeah, I see that all the time myself, even outside of an audit, just when we're just doing our basic accounting due diligence. And maybe we're going to take a company and roll them over into our firm from another firm. And, the first thing we do is look at their roll forward reports, look at their ending balances from the previous year. And it's very common to see data gaps in them, overstated or understated balances as a result. And you're just never going to get an accurate financial picture if that's the case. So I understand that you spend a lot of time speaking with CPAs and CFOs and accountants in this space. Is there any sort of like recurring issues or common misconceptions that you see when you're speaking to them that arise sort of thematically during your conversations?
Oh, it's an interesting question. I think recently, especially, I noticed that people don't always pay attention to transactions and activities that are rare. And it's often these activities, rare activities, they're very significant.
Yeah,
And this is what it's a gotcha that get everyone.
exactly. It's always these edge cases. The spot buying on Coinbase is going to be straightforward, but when you're dealing with obscure blockchains, new protocols, new assets, that's really where the time and effort is going to be put in on your side as a CPA or a CFO, and it is going to be an investment many times from the perspective of your time. But like you said, these fringe cases is where it's really important to exercise a lot of professional judgment.
And yeah, and I think there's one more area that I noticed coming up recently a lot, very recently, that uh, there's actually right now some dying blockchains. So small projects that used to be out there when we had a boom in 2020s, and they occasionally just stop working, right? So if the blockchain dies, then you don't have really source of data, and you don't know how to prove transactions, or like how to find the transactions in the past. So
Yes,
this
that,
is
that's a huge issue. I'm encountering that as well with defunct blockchains, and even more commonly now and over the years is defunct exchanges as well. I think
oh
that's a
yes,
huge issue from an accounting and tax perspective. And sometimes taxpayers are really left with not many good options, and that's why I always preach the importance of periodically downloading your transaction histories. Whether you're going to leverage whatever solution you're going to leverage, you want to be importing those transactions, and additionally saving it in your permanent records, not just sort of leaving it out there on one of these applications as well, is what I recommend, because I'm pretty sure you probably see that as well in your practice.
yes, exactly.
Yeah,
Save it and keep it safe.
absolutely, absolutely. So, what resources or learning strategies would you recommend if you're speaking to like a CPO, CPA, CFO, accountant in this space, and they're like, I need to start to get my pulse on this industry and start to build my knowledge in this space? Is there any anything you would recommend?
Uh, there are several sources. Yes. First of all, I have my own blog on this topic, so this is a good source. I believe TechAccountingPro, Substack.com, and uh, other courses that I recommend is there's Crypto CFO Club and Web Free Finance Club. They both have uh, programs right now for crypto accounting professionals. So this is a good place to go to get the foundational knowledge and learn more. Uh, but also, um, my advice would be to read HISPA, Audit and Accounting Guide for Digital Assets. Attend their webinars. They're very useful and very deep. Also, they don't really go in depth on a lot of transactions that happens with Web3 native companies. It's more like for traditional companies operating in Web3 space, but still very useful and very comprehensive review.
Absolutely, absolutely. I agree. All of those places are fantastic, and you want to make sure that you're joining these different groups and organizations and reading these different sources to really build a complete knowledge set. Because, like we said, this industry is changing rapidly, just from an industry perspective and also from a regulatory perspective. So, Andrew, what are your predictions, if any, for the future of cryptocurrency adoption and the the impact that that's going to have on our industry as accountants and CPAs and CFOs?
You know, I believe that crypto adoption is rising, and a lot of government and countries accept it more and more as a not as a primary, as a secondary uh, uh, mean of transfer of value, and uh, it's getting much more broadly spread, and I believe that eventually we will see uh, about maybe 30% of population using crypto payments just because it's cheaper, faster than traditional payment system, and it don't need to rely on a third party. Also, it's we're talking about the level one blockchains because we still have to rely on third parties, for example, in Lightning Network. But it's a separate conversation that we're not talking about right now.
Absolutely, absolutely. So, with that level of adoption, there's going to be a massive need in terms of serving these clients. So, if you're out there and you're listening to this space and you're listening to this podcast thinking about getting into this space, maybe you're, a Web2 CPA or CFO, it is going to be, I believe, very good for your career if you start to build up this knowledge and commit yourself to this learning path and serving clients in this space. So, Andrew, I really appreciate you being a guest today. I think you have a really great perspective on this industry and on accounting and taxation topics. So I encourage everyone to go ahead and follow you. Where are the best places for people to follow you if they want to get in contact with you or your company? Can you let us know that?
Yes, of course. So my LinkedIn page, it's linkedin.com in Andrew Belonogov. You can contact me directly there or on via Twitter at tech /accounting. Uh, Also, you can find me my websites, TechAccountingPro.com, Haberi.com, and TechAccountingPro Substack.com.
Fantastic. So I encourage everyone to go ahead and follow Andrew. He's got a wealth of information that he's putting out across his channel. So definitely go and check him out. And to everyone that has been watching here today, I hope that you took some value from this episode. And until next time, I'm Patrick Camuso signing off.